let me say, you don't look at this on on a lower time frame. You look at this on a higher time frame to give you a clearer picture, to give you a clear direction. So if you're looking at this, you should be looking at it on a weekly and a daily time frame. So once you have this bullish engulfing candle, what do you always expect? You always expect price to come back to two places. First of all, price should come back to where? These levels and continue buying. It's as simple as that. You don't, that's how to get your direction. This is something, it's everywhere on the internet, but a lot of people don't know how to utilize it properly. So if you are anticipating maybe this week to be bullish, then if for instance, let's say last week closed bullish like this, engulf previous week like this, then what you're anticipating this week to do is Monday, Tuesday should be selling to where? This point, because automatically this has formed an order block for us. So Monday, Tuesday should be selling to this point, and maybe from Wednesday, Thursday, Friday, have your expansion to the upside back to this level. That's how to get your direction from the higher time frame, starting from weekly. You don't just jump from you don't just open your chart and you go to 5 minutes or 15 minutes or even one and start to look for direction. No, you must build your direction right from the major time frame, because it's the major time frame that moves the market. The smaller time frame that just confirming what the major time frame is doing. So that is that for engulfing candle. Now the second most important candle you should always pay attention to, also we have what we call the pin bar. Some people call it the is it the hammer or so. So now let me draw it. Now this is how it looks like. If you see this on the weekly, what this simply signifies is that the bear, okay, let me have another one somewhere here. Even if you don't have any other candle, let's say that is here, but once you see this pin bar on your chart, or hammer, it's called hammer also, it simply means that the sellers open or price open here, sold down to this level and bought back up and closed bullish. What this simply means is that the sellers were in control, but what happened? The buyers came in and overpowered the sellers. So it therefore means that this price has no momentum of going back down. But in this kind of scenario, you still need a confirmation, because there's some level that you still see this pin bar, and what the price will do, price will still sell, price will still open and decide to do what? To sell back down. Decide to still sell back down and maybe close bearish like this. So, but once you see a pin bar like this, you still need additional confirmation. But once you see an engulfing like this one, as price is coming back to, you still need a confirmation here, because it's coming from the higher time frame, which is the weekly or daily. So you need at least one hour. If it's on the weekly time frame, you need 4 hours to confirm the directional move here. Once it gets back to this point, same thing happens to this one. If it's on the weekly, as it's pulling back down, you need 4 hours to confirm the direction around here. I'm going to show you what you are going to be looking out for around this level, because this week rejection, there are some levels, point of interest you need to look out for inside this week, so that you can get a confirmation and continue the buy if it's going to buy. But if it's not going to buy, definitely your lower time frame will still show you that it's not going to buy. So you avoid losing money. And what would that make you? To make you have a plan. So you are not just trading because you see an engulfing candle or a doji or a pin bar candle. Or, no. So that's not a good way of trading. So you have to be disciplined and have a set of rules to follow. All right, so you can use this on the weekly and on the daily time frame to frame your direction. Like I said, these are the two major candlesticks you need to be paying attention to on your chart. Now let's go to the chart. Let me show you some examples. Now, if you look at this is dollar index on the weekly time frame. This is the first pin bar I talked about. And look at this pin bar. If I look to the left, I want to see where that pin bar is coming from. Okay, look at this pin bar hit a key level here. You have this major level here. Now it's a down close candle, it's our other block. So now when that pin bar, when we hit that other block, what we have? We had this pin bar here. Now how do you going to confirm that the next week is going to, already this has already confirmed that this week is going to be bullish because of this reversal candle or hammer. So what will I do? I'll just drop one day. Let's get back to weekly. Let me separate that particular week so that you can see something. Now that's the week. That's the week. So let's drop one time frame lower, the daily time frame. All right. So this is when that week stop. This is where the week stop. So okay, this is where the week starts. So this is Monday, Tuesday, Wednesday, Thursday, and Friday. All right. So this is the next week. This is the next week, which is Monday. So let's go back to weekly and confirm it. So this is the pin bar week, and this is the new week that started this buys. So how would you have engaged it? Like I said, you drop down to your daily time frame, scroll down. Now what did you see here, or what can you see here? If you look at this price action here, you notice that after price gave us a pin bar on the weekly, this is the daily. The daily engulfs the last bearish candle that we had. This is also a kind of a pin bar, but it's not really perfect. It's not really a perfect one, but price has engulfed it. Now look at the engulfing candle, showing you a clear momentum to the upside. Now what did price do? You can see after the engulfing, price retested it with this particular candle, but did not close inside, still rejected to the upside. Then what happened on the next week, which was Monday? Price did what? Price exploded to the upside. And what happened? Continue buying. So now weekly confirmed the pin bar and daily confirmed the engulfing candle. And what happened? We had a lot of buys throughout that week. Till the next week, we were still buying. So those are some of the things you need to take note of. I don't want to go deeper. There are some confirmation too I'll have to share, but not today. All right. If you really want to go more deeper, you have to join the mentorship program for that. So, but for now, let's also look at our forecast. All right. So I've given you at least the basic understanding of it. So if you can go to your chart, you can do more study on it and you get more clarity and understanding. All right. So let's go down to the forecast for this week. Now, if you look at the weekly time frame, with those simple concepts I've shown you guys, you can see that on this week, last week, we took out this high. That is, this high took out upper week high and closed as a pin by rejecting the upper part, by rejecting a lot of highs here. If you notice, this is weekly time frame. Like I said, if you have a candle reject pin bar, this one is the opposite. The other one was the pin bar to the upside, rejecting to the downside, but this one is rejecting to the upside. It's simply telling you that we have more bearish markets, or we have more bearish momentum. We have more sellers now. So now, since we now see this, what do? Let's go to the daily time frame and see what we can get. Now, after that, what do we now have? We now had this bearish candle here, a good bearish engulfing. We had an imbalance that price started to at this point. Process of price to daily high. Price took out a daily high, drop inside and sold. Now, what can you see again? Price is still respecting this other block here. So we don't want to be aggressive sellers. Like I said, we need confirmation, because these markets, you need to be very conservative. Don't always be too aggressive. If you're always aggressive, you are going to lose money. I'm betting you are going to lose money because you don't know. The market condition is very, very dynamic. So you have to be very flexible to switch your bias once the direction has changed. Don't be very rigid. Don't be strong to a particular direction. Always be very flexible. If the direction change, what do? You adapt. You also change your direction automatically. So you don't just stay in one direction. When the market has changed direction, you are still cooking up onto that direction. All right. Okay. So now looking at this on the daily time frame, what we have is that last week, Friday, we had a major news. I think I can't recall the news, but I knew that we had a news on Friday last week, which made the dollar index to drop. Now, this is dollar index, like I said, this is the US dollar index. This is the dollar itself. This is the dollar that control Euro USD, GBP USD, all the major currencies. This is the guy. So if this guy is selling here, just know that GBP USD, Euro USD will be buying. NZD USD will be buying. AED USD will be buying. USD card will be selling. Why? Because it's USD card is the base. USD is the base. So it will sell. But GBP USD is the base. So GBP will buy. Why dollar will sell. Alright. So have it at the back of your mind. So now what can we see here? We had this major drop during that news, and we have this up close candle that price violated. Like I told you guys, don't forget engulfing candle and the pin bar or hammer, anyhow you want to call it, you can call it. But the engulfing candle and the pin bar, they're very important. They show you direction. Now what do we have here? This is the last up close candle, and we have this strong bearish engulfing candle. So what am I expecting? I'll mark this point out, and I expect price to do what? Retrace back to that level and continue the drop. It's as simple as that. What do you now need? Patience. That's the only thing that is left now. But if price can't get to this level, then you drop down to the 4-hour time frame. Drop down to the 4-hour time frame. There are a lot of levels here that you're going to be paying attention to. We still have this one here. Still have this one here. But these are the levels I'm expecting price to pull back to. So if price can't pull back to this point, if it can't get here, then if you get here, then what do? We have a close below this up close candle, and what do we expect? A continuation to the downside. So we need something like this, close below, we test and continue going down. So maybe we take out this low, this particular low. So for this week now, I'm bearish on dollar index. Anything that has to do with buys, I'll avoid it. Because I've already gotten my direction now. Anything that has to do with buys, I'll avoid it. I'll just wait patiently and see if price will be able to push further to this other zone here. If it doesn't get here, then maybe it's tap here and close below it. Then I'll expect a retest to continue down. But if it gets here, fine. It will still make sense, because if I use my Fibonacci to measure, that will be above 50%. Yep, that'll be above 50%, which is a nice premium price to sell from. So it will make more sense. But if it still decide to run from here, no problem. You still look for confirmation to join. So that is what I'm expecting on dollar index. But don't forget, like I said, you have to be smart and flexible. The market dynamics changes. If you have something like this, if I'm to change my direction to bullish, then I want to see price violate this whole bearish candle that you're seeing here, right from the top. I want to see price violate it. No matter what it takes, I have to wait. I want to see price do this, then I can expect a retest for a continuation. That's what I'll be expecting if if I'm to change my bias, this is what I want to see. But if this doesn't happen, then I'm still bearish. All right. So now let's look at, since I'm expecting a sales on dollar index, let's see what we are going to be expecting on the GBP USD, the Euro USD, and other major pairs. So let's start with Euro USD. All right. So this is Euro USD. Let me clear the charts. Same thing, go to the weekly. Now, you can see on Euro USD is doing exactly the opposite of the dollar index. Doing exactly the opposite of the dollar index. So now you can see the the Euro USD, see last week, rejecting, see strong rejection to the downside. This is simply telling us that, this is a pin bar I talked about, simply telling us that the sellers were in control and all of a sudden the buyers step in. And now the trend is actually bullish. So anything that has to do with sales, I'm not doing it. I'm not selling. I'm not going to look for any sales because I've seen from the weekly time frame that we are going higher. See the kind of, for a week to close like this is a higher time frame. It's telling a lot, it's giving a lot of information. So you don't have to neglect it. All right. So in that process, they took out last week, then dropping down to the daily time frame. What can we see? You can see that price closed above this bearish candle. So this is my other block. That's 1, 2. See the strong engulfing candle that we now have. Have you seen that? So what I'm expecting this week to do now is price will just pull back. Even if it doesn't get here, maybe create an imbalance today, and tomorrow we tap in and continue to the upside. So I'm not looking for sales, but rather we'll be looking for buys. Even if price decide to drop sales throughout this week, or even if price decide to sell throughout this week, I'm not interested. That's why you need to be disciplined and be patient. If you don't have a set of rules, if you are not disciplined, the market is going to beat you. But once you have rules that you follow and you consistently follow those rules, then you're going to be profitable. It's not every time you must trade. It's not every time you must jump into the market. You must allow everything to align in your direction before you place any trade. Weekly is bullish, daily is bullish, 4 hour is bullish. Maybe your entry time frame now, you can join once it turns bullish. But once weekly is bullish, daily is bearish. That's a retracement. If weekly is bullish, daily is bearish, don't trade. Wait for daily to align with weekly before you trade. As it is now, this is weekly being bullish. Now daily too has confirmed the bullish trend. But if I go to the 4 hour time frame here, even 4 hour time frame is bullish because of this strong momentum push. If I go to 1 hour, now look at 1 hour. 1 hour is still bearish. Look at it. We have a high. We are okay. We face the yes. We have a high here. We have a low. We have another high. Respecting this other block. What does that mean? It simply means that 1 hour is still bearish. So I can't come and buy. If I buy here now, for instance, if I buy here now, then maybe I keep my stop loss here. This is suicide. You are going to kill your account because the trend has not changed yet. 1 hour has not changed yet. And you cannot also buy here and carry your stop loss and come and keep here. This is madness because you are risking, this is 117 pips, and you want to target this high. That would be like 1:1, which is not a good risk to reward. At least your minimum risk to reward should be 1:2. That would make sense. So, but if it is like this 1:1, it doesn't make sense. You are not going to be profitable in a long run, because if you have 5 losing streak, then you need complete 5 trades If it is 1:1, you need complete 5 straight to recover. But if you have 5 losing streaks and you have like 2 trades, 1:2, 1:2, you can recover over four of those losses, and you're just left with one. So that is why it's always advisable you start with at least have a minimum risk to reward of 1:2. So from here, you can't be taking a buy yet until price retrace back to those are levels. Then you wait for a confirmation and you push. So that's what I'm expecting for Euro USD. So if I should pull back, then I'm expecting it to come around these levels like this. Then at this point, if price should come here and give the confirmation, my entry will be somewhere like this. For instance, my stop loss will be here. Then I'm targeting all those highs. Now you can see if I'm targeting all those highs, this should be a 1:7 risk to reward. So if I'm risking 1%, I'm going to get back 7%. It's very perfect. If you even have this kind of trade like 2 times in a week, you are done. So this 1:7 days that risking $10, you're making $70. But the other one was risking $10 to make $10. It's not a good return. So you have to check it and check it properly. All right, so let's look at GBP USD. That's for Euro USD. Let's look at GBP USD. All right, so let's go to the weekly time frame also and see what price is doing. Now this is GBP USD on the weekly time frame. Same thing is happening. If you look at this, price is coming from another block on the weekly. We also have this, like I always tell you, watch out for engulfing. This was my last bearish candle. We have strong 2 bullish engulfing candle here. Now this my bearish candle is my other block. So price retested it last week here and still rejects, giving us what? The pin bar, like I said. This is the pin bar I told you about, so, or hammer. So price is rejecting this level, telling you that we had sellers coming into this market, but the sales could not sustain. So what did price do? Price pull back up. Buyers now came in and overpowered the sellers. So what do we have? It now gave us this. So if we go down to the daily time frame, I'm breaking this down to the simplest form as possible so that you can understand it. So take notes. This is a very insightful class, or even this thing, so don't joke with it. Now what do we have here on the daily? You can see on the daily, like I said, this is another engulfing, strong bullish engulfing candle. So what I'm expecting price to do is pull back to this level and we have a continuation to the upside. It's as simple as that. Price, then where is my target to clear all this buy side liquidity? Price might not reach that high, but at least if price should move from here and I get a confirmation, you can trade it, take your first profit here, maybe take your second profit around this area, and you're good to go. With a good account, taking your profit at this level, you have a lot of things, or you have a lot of money in your bag. So that's how it is. You must wait for all those time frames to align. Weekly is bullish, daily is now bullish, then 4 hours is still bullish, but 1 hour is what? Bearish. Let's look at it. Look at it there. 1 hour is bearish. It's selling. So I can't come and start buying because weekly is bullish, daily is bullish, 4 hours is bullish. I'll now come and stand here and buy. Boom. Then carry my stop loss and come and keep here. Like I said, this is suicide. You won't make any money from this market. Before you see $10, this one is even negative. It's not even 1:1. It's even negative. So, but if you allow price to come back inside the range, and you look for a better confirmation, which is going to be, or which is what we normally do in our mentorship. If it comes down, there are some certain things we look out for. Once we see it and it confirms, what do? We take our trade, keep our stop loss. Now our stop loss will be inside the range, not no more outside, and we will be at target. This. So like this is already 1:4. This is 4.14. So if I'm risking $1, I'm making $4. Risking $10, I'm making $40. Risking $100, I'm making $400. If you have a huge account, risking $1,000, you're making $4,000. So that's how it goes. So that's the forecast for GU, DXY, and Euro USD. So let's look at one other pair. This is NZD card. No, I don't trade that. So let's look at least some. Let's look at gold for people that trade gold. Let's look at gold. All right. So this is the analysis for gold traders. I'm expecting bullishness on this week. Why? Because, like I said, look at how last week closed with a nice momentum with a kind of a full body, also rejecting the downside. So we had a lot of rejection to the downside, signifying that there is no bearish intent again. So what do? We just drop down one time frame. Let's see to the daily, and on the daily time frame, you can also see that price was reacting to this other block here, and you now have what? You have another block. This is another engulfing candle. Same thing. You need a pullback to that level and a continuation. It's as simple as that. If you just keep on doing this and you exercise patience for price to come back to your point of interest, and you are trading with the major trend, I bet you are going to be profitable consistently, not always jumping to the market every 5 minutes, every 15 minutes, every 1 minute that pass. No, you have to trade strategically and logically. Don't just trade because market is bullying. You are bull, or you now join and buy. Market is selling. You see selling retracement on the 15 minute. You also want to sell. You want to catch every moves. Once you start doing that, you end up blowing your account. But if you have a set of rules to follow accordingly from the higher time frame to the lower time frame for confirmation, then I bet you are always going to win 70 to 80% of the time. So that's the forecast for gold. All these things, like I said, if once price get to these levels, you still need a confirmation. You don't just want to jump in value. Don't do that. You still need confirmation on the lower time frame here to confirm that they are now ready to go back up. Once the confirmation is shown, you now join. So let me look at one more pair, which is the GBP JPY, one of my favorite pair. I like trading GBP JPY and USD JPY. So let's start with GBP JPY. Okay. So for GJ, last week close kind of bearish. Last week closed bearish. It took out this low, but there is no clear direction on the weekly here. Since there is no clear direction on the weekly, because it's as if it's going sideways, it couldn't close above upper week, or the high of upper week, or the low of the upper week, or sorry, previous week. So you can't really ascertain the direction yet. But from here, I can see that it's bullish from this other side of the market, because we engulf this series of down close candles here. So, but to get more clearer picture of this, I'll have to drop to the daily time frame. So now on the daily time frame, what I can see here is that price is respecting this up close candle. That's my other block. So I can use daily now to frame my direction. Why? Because the weekly is not really clear for me. So I just drop down to use daily to get more clarity because more candles will be formed there. So now on the daily, what am I seeing here? Can take this out. Can see that okay, price has been respecting this up close candle for a very long period of time. After it engulfs, see how we rejected it. Each time price get a reject. So what I'll be looking out for is for price to come down to this low. Let's look at the 4R2 and see what we have. Okay, on the 4 hours, you can see we had a clean massive drop here last week Friday also, and we had this violating all these other blocks. We have another block here, we have another block here. Everything was violated. So what I'm anticipating now is to see price pull back here, then maybe drop to this low. Then if, like I said, always be flexible, don't be too rigid in your bias. If price decide not to drop, maybe buy back and close above this high, then I'm expecting a bullish continuation. That's what I'll be expecting. It's as simple as that. So always be flexible. Don't stay very rigid to your direction. All right. So let's look at the last pair, which is all right. I think that's okay. That's okay for now. So let's see. That's the forecast we're having for this week. Dollar to be bearish, GU to be bullish, Euro to be bullish, USD, JPY to be bearish also, and so on. So I think that's we are going to stop for now, and we are going to entertain some few questions. Anybody that have a question should ask. Now the floor is open for question. So who have a question? Do we have anybody here with questions? Hello. If you have a question, you can indicate. Then we'll allow you to speak. Okay. Isiaka, something. You can speak. Isiaka, you can speak. Can you hear me?
Good morning, sir.
Yeah, good morning.
Yes, sir. Sir, please, I want to ask which time frame do we place the trade?
Beautiful. Like I said, you go down to your lower time frame and get a confirmation. So if your lower time frame, like me, I normally use 15 minutes. There are things I look out for on 15 minutes. Once price pull back to those my point of interest. So I use 15 minutes for entry because it's a lower time frame. Some can use 5 minutes depending on what you want to see. Some can use 1 hour. But don't forget, the lower your time frame, the higher your risk to reward, and also the higher possibility that price might fake you out. So you must know you must go back and also back test the time frame that you know that if price should take you out maybe like 2 times, are you still comfortable placing that trade if the direction is not violated? So basically for me, I will say use 15 or 30 minutes or 1 hour. So apart from that, you are going down to 5 minutes, 3 minutes, 2 minutes, 1 minute. That's to say you've done a lot of back tests and you see that definitely you're okay with that. All right. So I hope that's
Thank you,
clear.
sir. Yes, sir.
You're welcome. You're welcome. So who else? Who else have a question? If you have a question, you can ask now. The floor is open for you. In a message.
Hello, hello.
Yeah, I can hear you. Can hear you.
Okay, good morning. Thank you for the presentation.
All right, you're
I'm
welcome.
just wondering if you can relate the other blocks because you mentioned other blocks and it's like it's from the other blocks that the pullback comes to before it goes either up or down. But I'm still not clear about the other blocks. How do we identify them to know that they are the likely place the price will come on retracement before going up or before going down? The other blocks, how do we relate it to the market going up or going down? Thank you.
All right. All right, that's a nice question. Now I'm going to break it down again. Now, the other block days,
Hello?
I can hear you. I can hear you.
Okay, that's the question.
Okay. So now you want to know the other block. Is that what you're trying to say, Abby?
Yes, I want us to relate the other block to retracement of price. When they
Okay.
retrace, how do we know where they retrace to? What determines where they retrace to before going back?
Okay.
Yeah, yeah.
That's beautiful. All right. So I'm going to show you guys, but there are some things that I still need to learn.
Okay.
Even if I show you, have to go back to your chart and also study. Now, like I said on the daily from the daily time frame, in a bullish move, let me just explain this for you guys. In every bullish move, let's say bullish trend, most especially, all the bearish candle you are seeing in that bullish move, they're all your order blocks. And
They
in
are
a
what?
bearish move, they're your order blocks. Those are
Okay.
point of interest you're expecting price to pull back to. Now, there are other point of interest, but I just want to show you this one first. Maybe in the mentorship you learn the other ones that we use, but this one is a very simple one that everybody can relate to it. So this is a bearish candle. This bearish candle you are seeing here. Once price close above it, it turns automatically to your order block. Some people call it support and resistance, but as a smart money traders, we call it order block. If you look at this from here, let me look. I will show you an example. When we had this bearish candle here, we trace down and price close above it. These are bullish moves. So all the bearish candle, we expect price to respect it. Anytime price violate it, then the chain has changed. So if price should respect it, what am I expecting? I expect price to pull back to those levels, and continue. Now, if price don't pull back to those levels, there are other levels we normally look at, like in our mentorship, we look at three levels. You always expect price to pull back to. So if I drop down to the 4-hour time frame, you can even see it clearly. Now we have this other block here. From here we have another block here. We have another block here. We also have another block here. From these face candles here, all these bearish candles, because the chain has changed from bullish now. Sorry, from bearish now to bullish. So all these bearish candles, they should support price to the upside. But how am I going to know which one I'm going to use? Is when price gets there. I just mark them and I wait for price to get there. Once price get there, like I said, we don't trade aggressive. Someone like me, I don't trade aggressive. I don't do aggressive entry. I don't know. I don't want to do the greatest sniper entry guy. No, I want to make money, so I want to trade conservative. I want to confirm if the other block is going to hold. That's why my POI is called point of investigation. If price should come here, I have to investigate if this other block will hold price to go back up. I will not just jump in. If I jump in, what if I jump in and price do it like this, violate, and boom, retest and continue selling? I will lose money. So in that case, I don't just jump in. Once price gets here, I know that this is my first order block. I still have another one here. This one is even more discount. So those would be my two areas of interest. So if it gets here and give me the confirmation, I'm gonna buy. If it decides to drop down and give me the confirmation here, I'm still gonna buy. But once it violates these 2 points and close below this all this bullish move, definitely I know that the trend is about to change, and I still use my higher time frame to confirm it. If it close below that point, I don't use lower time frame to say, oh, it has closed below, let me sell. Mbano. I still use my higher time frame to confirm it. Then I wait for what price to come back to that level. I still wait for that same confirmation to short. So that's how it is. As it is now, I can't buy from here. No, I can't buy from here because I don't know where it's reacting to. It might be reacting to this point or this point, but I'm not interested because I needed to at least pull back a little bit to this other level from here. Let me even say from here down. Then I can start looking for confirmation. So you must wait for confirmation. Once they pull back there, all these series of down close candle, just like you saying high, low, lower high, lower low, lower high, lower low. So once they break the last lower high, what do you expect? A retest on that lower high and a continuation. So that is how it is. That's for market structure. So that's exactly what you should always be looking out for. Look at this point, same thing happened. That daily level that I mark here, that daily order block that I mark here. Look at when price went up, came down there and bought. So that is how it is. You must pay close attention to this level because it's where price will always come back to retest. It's just like a break and retest. So that's how it is. I hope it's clear.
Yeah.
All right, all right. So do we have any other question from someone else? Who again have a question? Mike Muller, Woodroom Sylvester, Inemesit, Bless Thomas. If you have a question, you can ask before we end the session.